Hello, everyone. Welcome. Andrea here with a bit of a very deep voice. So unfortunately, I got sick. So you need to be a bit patient with me today. So I'm remote, guys. I would like your help in regards to the audio and the visual of this webinar. Let me know whether you can hear me loud and clear. Interrupt me anytime if you're facing any kind of issues. Yeah, but for now, I would really appreciate a feedback in regards to the audio more precisely, whether you can hear me loud and clear. So, oops, what have I done over here? No, that should be coming down. Okay. So until I have a feedback from you, I will we're gonna sit together what we're gonna cover today. So pretty much today is all about multi-time frame analysis. So how you can analyze your charts, and you can identify even some possible trigger points by monitoring and reviewing the other time frames other than the one that you are actually trading. So by analyzing higher time frames or even lower time frames, they give you some signs. So this is what we're gonna cover today. Can anyone reply in regards to the audio, guys? I really need a feedback. So otherwise the recording will go wasted as well. So I can see that it captures some sound, but I would really prefer a comment from you. So I borrowed these slides from Stuart. So this is actually Stuart's webinar. So we're gonna see today, as I said, how you can proceed with multiple time frame analysis. And gonna see some examples as well. Okay, so I will go through the disclaimer warning and proceed with the webinar as usual. This material is provided as a general marketing communication for informational purposes only and does not constitute an independent investment research. Nothing in this communication contains or should be considered as containing investment advice or an investment recommendation or solicitation for the purpose of buying or selling of any financial instrument. All information provided is gathered from reputable sources, and any information containing an indication of past performance is not a guarantee or reliable indicator of future performance. Users acknowledge that any investment leveraged product is characterized by a certain degree of uncertainty, and that any investment of this nature involves a high level of risk, for which the users are solely responsible and liable. We assume no liability for any loss arising from any investment made based on the information provided in this communication. This communication must not be reproduced or further distributed without our prior written permission. Risk warning: trading leveraged products such as forex and derivatives may not be suitable for all investors as they carry a high degree of risk to your capital. Please ensure that you fully understand the risks involved, take into account your investment objectives and level of experience before trading, and if necessary, seek independent advice. So you can find our full risk disclosure in our website, along with all the rest of the legal documents that you might want to check. So we are good to go, even though I don't have any feedback from you guys in regards to the audio. Please a quick yes or no. It's very helpful for me. Okay. Okay, thank you very much, Nicole. So thank you, Peter. Let me double check whether this is actually recorded. Yes, it is. Perfect. Okay, so what is actually time frame? What I mean by multi-time frame analysis. Multi-time frame analysis involves the review, if you prefer, involves the review, the monitoring of more than one time frame for that particular asset that you might want to trade. Okay, so at least 2 time frames are considered to be a multi-time frame analysis. So you might use this kind of trading either if you are a day trader, or even if you are a momentum trader, or even if you're a breakout trader. So it applies to many different kinds of traders. So there are many traders, especially the trend followers, the day traders, the trend traders, that they use multi-time frame in order to identify clear levels of support or resistance. Okay, so you might even doing a multi-time frame analysis, you might not even know it. Okay, because that we have presented many times in the past that before you take an entry, it's good to move up at one time frame to check the overall trend, or to move down one time frame to check whether the signals that you're getting are actually correct or accurate. So you might have done something like that without being aware that it's actually called multi-time frame analysis. Okay, so as I said, multi-time analysis involves monitoring the same asset, either that's a currency pair or whatever, across different frequencies, across different time frames. Even though there is no particular number of time frames that you can monitor, or in theory, there is not something that I can tell you that guys don't check all the time frames. There is not something like that. There is not such a rule. But as we keep saying, don't complicate things. Is not identical to check daily chart if you're about to trade on a 15 minutes chart. That's why typically you should use no more than 2 or 3 maximum different periods, different time frames, because these are considered enough for you to confirm your signal, or you to identify the momentum, or to identify the trend in general, to collect informations. Okay, so 3 time frames are more than enough, and the simpler the better. Okay, so what we usually do is using a top-down approach. Okay, what we mean by that is identifying the dominant trend. Okay, so for example, checking, I will give an example. Okay, checking the daily chart. Okay, to identify any major medium term support and resistance levels, and to check the overall trend, and then going down to the 4-hour chart, okay, to see where our asset is standing, or even go one step down as well to the 1-hour chart, to if I am interested, if I am an intraday trader, so my trade will be intraday, so I prefer to trade in 1-hour chart. So this is pretty much what we mean by top-down approach. So initially checking your long time frame, identify major support and resistance levels and a trend, then intermediate solutions for confirmation of the long-term analysis and recognizing some immediate pivot points, and then going down to the smaller time frames for entry signals. If of course you are a trader that you are usually trade at a small time frame, okay? So by longest, you can see my slides, the word longest, intermediate, and small. This doesn't imply necessarily two. I mean, the longest implies to monthly, weekly, or daily, and intermediate to 4 hour, 1 hour, and smallest 2 minutes. That doesn't necessarily mean that. It means that if you are a trader, that you are trading 15 minutes chart, okay? Be careful with what I'm saying right now. If you're a trader that you like trading 15 minutes charts, for example, okay, which is a short time frame, right? Then you will start with your 1 hour chart. So 1 hour chart will be your longest one, intermediate will be your 30 minutes chart, and the entry will be your 15 minutes chart because you are a 15-minute trader. So this is what we mean. You will start from the top down. So I mentioned before that you shouldn't use more than 3 time frames, right? And this is what I'm suggesting over here, that if you're a 15 minute trader, go 2 scales higher, check what's going on in the high time frame. So in this case, if you're a 15 minutes trader, in the 60 minutes one, in the 1 hour one, check what the 1 hour one is telling you, identify key support and resistance levels in your 1 hour chart, check whether there is a trend in the 1 hour chart, put some lines on, then going down to the 30 minute chart to check whether it goes in line with the trend, and then go down to the 15 minutes chart to see where is it standing. Is it standing at the peak of the trend, at the bottom of the trend, reversing, rebounding, whatever, in order to take your decision and finally enter your take your entry. Yes, Patricia, don't worry. Since you have already attended, you will get the recording once we are done. So if you don't have the time to stay with us right now, feel free to go, because you will anyway receive the recording. Okay, so it is very, very important. Okay, before we go to the pivot points, it is very important, guys, to select, to actually make this kind of to adjust the multi-time frame analysis on your strategy. So don't try to change your strategy. If you are a 15 minutes trader, okay, that's fair enough. Go for it and try multi-time frame analysis as well. If you are a day trader, why not? Okay, still multi-time frame analysis is available. But if you're a day trader, you will consider checking the monthly, weekly, the monthly, weekly, or even the 4 hour chart sometimes. So you need to adjust this based on your what kind of trader you are. Clearly, a long-term trader who holds positions for months, okay, will find little use of 15 minutes or 16 minutes or 4 hour chart. So that's why I'm saying, if you are a long-term trader, you're holding your position for months or even weeks, then if you want to apply multi-time frame analysis, you need to monitor the monthly, weekly, and daily chart only. Don't go below daily chart, because you're a long-term trader. For those that you are holding your position just for a few hours or even a few minutes, then the longer you can get is a day, and it might not even help you. So the longer that you can get, it might be the 4 hour chart, and then downwards, top down approach. Yeah, so why I am using pivot points over here? Remember, it's just a quick recap on how you will be able to identify in the higher time frame the major resistance support levels. Okay, so remember that pivot points are very helpful, and you have the indicators to find them automatically without you doing like a lot. So we have pivot point analysis in our MT4, and also we have fractals. Fractals can give you this kind of pivot points and turning points in a price. So by applying fractals or pivot points, that will help you identify the pivotal highs and the pivotal lows in your charts. And once you identify something like that, you can put a line on in order to have a note that this was my major support level, my major resistance levels when I check my daily time frame. Okay, so if you, let's assume that you are stick to the 1 hour chart. Okay, you are a 1 hour trader, intraday trader, so you're going to the daily chart first. By checking your fractals or pivot points, you identify some major resistance levels on pivot highs and some major resistance support levels based on pivotal lows, and you're putting some trend lines on. Okay, so once you're going down to your 4 hour and 1 hour, those lines will be on, and you will be aware that that was my major support and resistance level. Okay, so let's move on. And why they are important? Because they might be treated, other than support and resistance levels, they might give you also entry points or signals. Why? Because if you guys, it's very simple. I think we have went through it many times, right? So let's assume that you have identified using pivotal points, pivotal highs and pivotal lows. Let's assume that you have identified some significant support and resistance levels in your daily chart. Okay, you have identified, you have put your lines on, you notice that you're in the daily chart, the asset is following an overall uptrend, like the one that I'm presenting over here. Okay, so now you are monitoring the 4 hour chart. So and you have identified that your 4 hour chart is really close to the lower trend line. Okay, so close to your support line that you have identified in your daily chart. And let's assume, okay, you have identified that from your 4 hour chart, or even in your 4 hour chart you have put even you have found more immediate support and resistance levels, so support and resistance levels that they are closer. Okay, and you are now went down to your 1 hour chart, monitoring what's going on, and you have noticed that eventually, okay, eventually your asset, which was close to your trend line, it has rebounded away from it and even broken. So the rebounded from the major support level that you have identified in your daily chart, and even broken the pivotal high that you have identified from your 4 hour chart, which now looks to treated as a support level. So it was a resistance level, so it was our pivotal high, the one that you have spotted in the 4 hour chart. And you have seen that in the 1 hour chart, your asset rebounded away from both these support levels. So this daily trend line, this previous pivotal high, which was the immediate resistance. So it broke them and extending high. So that sign was a good entry point in your 1 hour chart, because you have identified from before that that level is not just random, is the bottom of my up channel in the daily time frame. And that breakout over here is not random. It used to be resistance, and now it might turn into my immediate support level. And I know from the daily chart and my 4-hour chart that my asset is following an uptrend overall. So you understand how this helps you. It helps you because you know all these informations, and once you identify a breakout in the 1-hour time frame, you are more confident to take the entry. So that rebound and that breakout, it was a nice entry level. For which direction? Long. Okay. And other than that, it's not only a matter of entry point, but also is a matter of target levels and stop out levels, because from before, okay, we have identified a channel. So this old pivot high can now be our stop loss, or if it's of course, if it's in agreement with our support and with our risk and reward ratio, or we don't want this to be our stop loss because it's too tight for us. The trend line, the bottom of the channel, so this trend line that we spotted in our daily chart, could also react as our stop loss. Okay, so in regards to targets, old peaks, old pivot highs could act as our targets, or Fibonacci extensions, of course. Let's move on though. Yeah, that's the pivotal low. I think you got the picture. The pivotal low could react as our immediate support level if we are in an uptrend, and it could react as our resistance level if we are in a downtrend. The same exact mentality. Review the longer time frame, put some lines on the pivotal highs and pivotal lows, identify the trend, and then go to your lower time frame in order to spot an entry level. So this is the vice versa scenarios in the case that you have spotted in the higher time frame and downtrend. So you understand that any pullback away from the top line, from the resistance line, and a breakout of our immediate support levels, which are our pivotal lows that we have identified in the higher time frames, they can react as entry points. Okay? So, however, I think you got the picture in regards to the monthly time frame, but it's not only that is important. I mean, to finding support levels, identifying the overall trend, etc. What also matters is how you can time your signals, right? Timing is important. Identifying a trend is easy. Identifying some support and resistance level is not that hard either, but timing is quite tricky, right? Timing is quite tricky, and this is what we're gonna do today. Timing, if you are in an uptrend, is when you should look. Yes, it's tough for anyone, Nicole. It's a bit tricky. So that, I think that's the highlight of the webinar. So when you are in an uptrend, you should look for, you are obviously looking for buying signals, right? Once you're in a downtrend, you are obviously looking for lower time frame signals, because it's quite important to go with the flow. What I mean, you should always remember that the trend is your friend. And why is that? Okay, obviously there are a lot of you and there are a lot of traders that they open some short-term positions going against the trend. Okay, fair enough. That's a method. Okay, but when you're studying the charts, it is generally the best policy to start with, okay, is to start with the long-term time frame and work down to the more granular frequencies, like we already said. So by looking the long-term time frames and identifying the dominant trend, it is very important, and it is the best for you to remember that the most overused adage in trading for this time frame is the fact that the trend is your friend. So the market participants are aware of this overall trend. The big players have formed this kind of overall trend. So it's good to go along with the flow. It's good to go on the side of the trend along with the institutional players. Okay. The trades that you might consider taking should be on the same direction as the overall trend. This doesn't mean that, I highlight once again, that this doesn't mean that the traders that want to go against the trend, they can't. No, you can't, but you need to consider a very, very, very tight risk management. Okay. But remember that the people that they will decide to go along with the trend, they have higher probability of success, while the traders that want to go against the trend, they have lower probability of success. Okay, so the ones that they're gonna take trades against the trend, they, as I said, should consider a very, very carefully their risk management, and they should consider taking smaller profit targets because it might get against them anytime. While the people that they will go along with the trend, they have higher probability of success, and they also have and their profit target could be higher. Okay. So that's why we're saying that it's good to that's why we've said that the trend is our friend. Okay, so timing, I'm not forgetting timing, don't worry. So how you can time your entries, excuse me. So so we have discussed about the top-down analysis that remains our main object. We have discussed about keeping 3 time frames into consideration, no more than 3, otherwise it gets very complicated, right? It's good to also keep in line with the overall trend, because this lowers the risk and increase the probability of success, okay, and give you confidence as well. Okay, so now in regards to the timing, it's not that tough, but it's a bit tricky, so you need to be very careful. So timing long entries in let's take for example uptrend. Okay, so we have seen pretty much the approach. Let me know if you're struggling with it, okay, before we start the timing. So let's assume that this is a euro dollar, whatever, okay. Yeah, so okay, sorry. So how you can time your long entry positions. Okay, we have identified the trend, okay? In the daily chart, it's a daily trend to the upside for many days now. So now you should check for momentum and important levels. So we have already seen how you can identify important levels. Important levels are the major support and resistance levels that you will identify in the daily chart, using pivotal highs or pivotal lows, or simply using fractals or pivot point analysis as well. So now momentum, we haven't touched momentum. You should always have at the bottom of your charts momentum indicator. MACD is a good idea as well. So by monitoring the momentum, you will know in advance whether your asset, your overall trend is running out of steam or not, or whether it's getting is like getting stronger. So it's not a matter only of price action, but also of momentum. Momentum can actually help you time your position. And what I mean time your position, identify when is a good time to exit. Okay, so let's assume that our asset right now is close to the support level. For momentum, I use MACD, okay, and I use also RSI, okay. Yeah, I found them useful. I mean, it depends on your personality, dear Nico. I found them useful for myself and for my strategies. Okay, so it depends on you and which indicator is straightforward to you. It doesn't necessarily mean that we will have the same, but yeah, MACD and RSI are the ones that I never ignore. I mean, I always have them in my charts, even in my short time frame charts. So, okay, so let's assume that the price is currently close to the support level. So the bottom of the uptrend. So we are aware that by knowing that it's at the bottom of the uptrend, we understand that in order to identify an entry point, a long entry point, we need to see our asset rebounding away from the support level. Okay, so but sometimes price action at pivot points we might see it reversing at pivot points, and sometimes we can see it like retesting or even rejecting sometimes the pivot point. So what we should do, other than the fact that we want to keep monitoring the price action in our intraday chart, so we're going down to the 1 hour chart and monitoring the price action around this level, okay? Because by monitoring in the lower time frame, as we said, we're going to identify our entry position. But by other than the entry position, we need to consider, do I have it in the next one? So yeah, so by going down, it's important to monitor how the price, the asset behaves close to these support levels, because by checking it and checking the body of the candles can give us an intraday confirmation on whether it could continue detecting or even break our uptrend to the downside, or whether it is about to rebound. Because can you see that we like here and here, okay, down, a dodgy one and a bullish one reversed in the previous 3 sessions. So that was a confirmation or an indication that, yep, is ready to move up, is ready to rebound. So that could be an early entry point, or that one as well. So 2 down sessions, bullish, bullish, okay, bullish. So the fact that it's consecutively providing higher lows over here is an indication that is ready to rebound. So that gives you time to consider your entry level, your stop loss level, but also your exit level. So to time your entry. How you can time your entry? Other than the fact that you should identify your entry point by monitoring the shorter time, the smaller time frame, then you will use your pivotal points as target levels. So this is how you can time your entry. You will set in advance your targets. And other than that, something that I forgot to mention is that you need to make sure that your momentum indicators in your 1 hour chart are presenting rising momentum. So like here, rising momentum. So it means that, you know what? Yes, I'm getting back higher. I have more bulls than bears. Bulls are gaining the control again. Okay, so let's see actually this example. So this is a dollar cut one. Okay, so trending higher, obviously. This is the daily chart. So by connecting the highs, by connecting the lows, we have identified that this in a uptrend. Okay, currently is somewhere in the mid of the uptrend, right? So we need to spot our pivotal highs as well. So in order to identify the major support and resistance levels. So one of the major support levels is this pivot low over here, 111.97. One of the pivotal highs is that one over here, one should be somewhere around 115. Okay, or or that one over here, another pivotal high, or also, sorry, if you check a bit, you can see that this latest, so pivotal high, pivotal high, pivotal low, pivotal low. So we have identified our support and resistance levels, but you can also check how strong these pivotal highs are, the support and resistance levels are, by applying Fibonacci levels, for example, like in this example over here. So by applying on this down leg, the Fibonacci levels, you can see that the 23.6 Fibonacci level is really close to the pivotal high that we got over here. Okay, also, so we have found pivotal highs, pivotal lows, applying our Fibonacci levels just to give us further support and resistance levels. But look at that. So currently I'm here, right? So my price action is here, broken the previous pivotal high. Okay, but I have noticed that it formed some kind of a triangle in 2 days ago. If you are lucky enough to spot this triangle 2 days ago, you will have been able to also take a long trade on the breakout of it. But okay, we missed it. That's fine. But why I mentioned this triangle, even if you have missed it, being aware that these kind of triangles, okay, in the future can help you setting your target levels. So let's assume, okay, that you have spotted this triangle, okay, and you were somewhere here. It was the 1st of December and you were here in a bearish day. You have spotted this triangle, you have put your lines on, and you were expecting, so you knew that this is an overall long trade, long uptrend, right? You have spotted your top highs, top lows, and etc. And you were expecting for a signal, either if that was the breakout of the triangle, either to the upside or to the downside, or the breakout of the pivot point, okay, whatever. So you were expecting for a breakout. And let's assume that you have seen that breakout on the, I don't know what's that, that's the 6th of December, don't know, but this, so that day you've seen that your asset broken your triangle, but also broken your pivot high. So you decided to take an entry, a long entry. But where you should put your target? So since the latest pivotal high has broken, okay, you could use your Fibonacci extensions, of course, but there is another way as well. Since you have identified triangle, you can measure the base of the triangle, so the beginning of the triangle, so this distance, this from this, you see that, this distance, and you can set your target at the same distance from your entry point. Let's assume that this is your entry point. You are taking the same distance. So your target is at 115.44. So you have taken your target based on the width of the triangle that you have seen before. So I have some questions. Nicole, RSI is a short term, MACD long? No. They can both use long term. They can both use short term as well, but you need to change your settings. So for daily chart, at least for the majority of my currency pairs, okay, I notice that the 14 minutes, the default RSI and the default MACD work just fine. Okay, but if you are gonna apply them in the 1 hour chart, or even 15 minutes, 13 minutes chart, etc., you need to consider changing your settings. So maybe you need to play a bit with it, Nicole. You might consider trying a 7 value RSI. Let's try this, okay. And maybe a 533 MACD. There are different settings. You need to play a bit with it. 5, 3. So I'm changing my settings to see what they give me. Oops, what have I done? Sorry. Where's my MACD? So 3, 5, 3. Okay, so yeah, can you see that I have changed? Let me get rid of the stochastic, even though that's a short-term one as well. So I have changed my MACD, changed my RSI, detected them in order to see whether they give me more accurate signals in this 1 hour chart. So RSI over here broken the 50 period moving average, and it's at 57 right now. Flat 10 MACD is increasing higher, so they are in line with the ups and downs of the price action. So if you are considered to change to use them in a shorter time frame, you need to play a bit with the time frame with the settings to find the ones that they are more appropriate for your time zone. Yes, we have webinars with these indicators. If you go, let me send you the link. Let me send you the link. So where is our webinar link? So you're very welcome. So if in our website, let me find it, come on. Come on, webinars. Visit our website. Okay, now our website. This is a website. This is the webinar section, right? Tools, sorry, education, webinars. And I came to here at the very bottom. Okay, the very bottom of it. You can see, click here to review our past webinars. So by clicking here and searching, for example, MACD, or the correct name of MACD is moving average, oh, sorry, average direction. Come on, do it, okay. So MACD. Searching MACD, you can see, okay, this is how to trade with MACD. So, or if you check RSI, come on, you can see also all our related webinars. So understanding RSI, there are plenty. Okay, so I go on and so forth. So that's how you can do it. So let's get back to our example. Is the example very welcome, Nicole? It's my job to help you, so don't worry about it. I'm here to help anyway. So guys, Zubairu, yes, I have uploaded the PDF. You cannot see it, please. Yeah, I have uploaded, so feel free to download it. Zubairu, okay. Okay, guys, are you okay with the example on how you can use the width of the triangle as your potential target level? And then of course, then you can apply Fibonacci levels as well, right? They also, the Fibonacci extension also work as nice target levels, or ATR. Okay, there are plenty of ways to do it. It's just an idea. So let's move on. Since I cannot see any question, so trade idea. Look for corrections to the support level and then intraday momentum reversal signals before entering long trades. So this is it, guys. You have done your homework, you have checked your daily chart, you have checked your 4-hour chart, and you're down to your 1-hour chart and trying to identify the your entry point, right? So what you are looking is for what we said earlier, for this, a sign of reversal, a sign of rebound, and this along other than the momentum, the price action, by checking your momentum indicator. In this case, is a stochastic. If you think your stochastic also increasing, then you have the confirmation that the momentum is also on your side and is increasing. So meaning that the bulls are gaining the control, so you are good to go. So looking for the corrections to the support levels, and then intraday momentum reversal signals before entering long trades. Dear Zaibaru, so you can click download, but you cannot see the PDF. Check on your download folder. Okay, it might automatically download it, and so it might be on your folder already, on your download folder. If not, let me know, please. So oh yeah, so That was a 4-hour chart of our example, which is I didn't present you. So where the stochastic, so we have identified the overall trend, remember? So obviously we went down to the 4-hour chart to see where is it standing and etc. And we spotted that triangle. Sorry, I missed that. So yeah, we have actually covered them, but let's see how the 4-hour chart looked like. So we broke it eventually. So we set our target over here. Okay, at some point we have seen a pullback. Okay, down to 114.20 and actually nearly at 113.82 level, which was our Fibonacci level. So we had a strong pullback over here back to our entry point. So we have seen a reversal, but the asset remains above the triangle, remains away from the major support level. So that was just a tiny correction before eventually hitting the target. Okay, so that's why it's crucial to set your target. That's why it's crucial to set your stop loss, because the stop loss, okay, let's get back, could have been either set at the bottom of your channel or at the bottom of your triangle, okay, or at the previous pivotal low, pivotal high, sorry, pivotal high. So if we treated the stop loss in this way, then your trade will remain open. Okay, so try to set like the stop loss at a reasonable level. You can say, Andrea, but this is not always easy. Okay, if it's not always easy, use trailing stop. Why not? I found them very useful. So set your stop loss 10, 20 pips, 30 pips away from your entry level, depending, of course, on your risk and reward ratio. Okay, so with this way, you are locking profits as well. I can see after clicking. Zubairu, have you managed to download it? Is it in your folder, in your download folder? No? Yes? Please let me know. So that was how the 4-hour chart looked like. Okay. We had a pullback, not significant. So if you had set your stop loss at the bottom of the trend line, as I mentioned, on the previous pivot low, or at the channel's bottom line, then you should have been safe. No, it wasn't there. Please show us how to read triangle from left to right, opposite to that one. It's just connecting the highs and lows. If you spot it, that's good. If you're not, then it's not there. I mean, don't try to chase, don't try to find triangles. If it's there, you will be able to see it. So, I mean, I don't have a better example, but okay, by seeing that it's going up, down, then again up, then again down, and try to see, something's going wrong over here. Let me connect the lows, let me correct the highs. So if you do something like that and you see that, oh, it looks like a triangle, then it is what it is. If you can see it, that's good. If not, don't try to find one, dear Patricia, okay? But if you see it, put your trend lines on and wait for the asset to break either above, so to move outside your triangle, or either to the upside or to the downside. You understand what I mean? Hopefully you do. If not, let me know. So that's a downtrend example. So in the daily chart, we have a really sharp decline. We don't have a downtrend, but our S&P was higher and higher, higher until eventually we have just in 5 days a sharp dip. Can you see that? So we have applied our Fibonacci. We noticed that it broken our 200 moving average. It's outside Bollinger's, and there was a dramatic decline. So there is no demand in the market, right? You can see that Stochastic are oversold as well. So what we do? Okay, we don't do anything really. We have just identified, we're collecting data, we're collecting information. So we identify that is in a sharp decline, is oversold because it's outside Bollinger's, and our momentum indicator also presents that it's oversold. So this is what we know, and we have applied Fibonacci. So we have some immediate resistance levels spotted using our Fibonacci. So this is what we know by our daily in our daily time frame. So we have keep the Fibonacci levels on because we don't have pivotal highs or pivotal lows nearby. So the only way to find support and resistance levels in this case, it was support and resist. It was the Fibonacci level. So we have applied them and we have identified our immediate resistance levels. And we know that it's oversold. So it's oversold, but without any sign yet for a reversal, right? So this is what we know from the daily chart. Now we are going down to the 4-hour chart, which is the exact next time frame, right? So in the 4-hour chart, we have seen that the momentum has turned higher, right? The asset it went back to the pivot point area and is rebounded and retested 23.6 Fibonacci level. Okay, this one is not a strong Fibonacci level. Okay, but we need to keep monitoring. So in this 4-hour chart, what we are getting is that the downtrend might be running out of steam. So the downtrend presents some kind of a reversal. But we cannot really confirm that yet because it's still below the 23.6 Fibonacci level, right? So that's remains our immediate resistance level. Very next resistance level is the 38.2, which also coincides with the daily low back in the 10th of December. So if I go back to the daily chart, we can see that that was our previous, sorry, over here, 10th of December. So that is also the 38.2. Let me know whether I can draw the 30. Oh, not highlight laser pen. So that 38.2 is also the support level that we have seen from the 10th of. So I've seen since there, to be more precise. Why I cannot draw? Okay, I cannot draw for some reason, but you see that coincides, the 38.2 coincides with the 10th of December support, but also support that we have seen since the beginning of November. So let's get back to the 4-hour chart. So this is what we know so far. It's rebounded, but remains below the 23, so it's not an entry signal yet. And the key resistance is at 2022, which is our 28.2 Fibonacci level. Now, I'm going even lower to the 1-hour chart, right? 3 scales, only 3 scales, remember. Zobairu, I'm gonna send it to you via email, okay? Can you send me your email address there? So yes, so we check our daily chart, we check our 4-hour chart, and we went down to the 1-hour chart. Don't be confused by this, what I wrote over here. This is a 1-hour chart, and I'm monitoring my 1-hour chart to identify my entry point, right? So, so the asset, let me get a step backwards. Remember, over here, we have been on the 15th of December on this rebound. And we went down to the 1-hour chart and we were monitoring our asset. So on the 15th, as we see, it rebounded, retested the 23.6 Fibonacci level, but it failed to break it. Instead, so it retested it once, twice, 3 times, and then eventually turned back down. It failed to rebound. It failed to break that resistance level, and it moved down. So with a quite big hourly bearish candle. So that was an indication that the downtrend is about to resume. It's about to continue its decline. So this decline that we have spotted, that we have spotted in the 1-hour chart is ready to extend. Okay, so that was a sign that you can consider taking a short position on this overall downtrend. So it retested, it failed, but instead it turned sharply lower, retesting. Can you see the tail? The tail was just a breath below the previous pivot low. So that was an indication that the bears have gained back the control. The confirmation, if you weren't sure, okay, because our stochastic, also our stochastic had a bearish cross over here. Can you see this bearish cross and the extend lower? So that was another sign that the bears are in control. But even if you weren't sure, you can wait for the next candle, which was again a bearish one. So you could have taken your trade afterwards. Okay, so consolidated a bit, but extended again lower. Consolidating, rebounding, but extending lower. So that was a nice entry point. Or if you missed that, the confirmation came here. So that was another entry point, even though it lasted a bit longer because the asset was consolidating afterwards, but eventually dipped further to the downside. So if you were about to take an entry on this position, you should consider as a stop loss the 23.6 Fibonacci level, so 2009, and as your target levels, either using Fibonacci extension, or I'm going back to my daily chart, or 50-day moving average, or the previous pivotal high that was at 1906, or Fibonacci extension, as I mentioned earlier. That's up to you. So yeah, you see, by zooming in, so this is the 1-hour chart again, retested, okay, taking an entry, it extends down here, okay, rebounding, retesting again our resistance level, but failing to break it. So that was another indication. Actually, here it was another short entry because it rebounded sharply, failed again to break the 2009 level, and turned down again with consecutive bearish candles. So that could have been another short position. Okay, guys? So because it moves to the same resistance area. So this resistance is very strong, indicating that there might be a strong reversal, which is indeed happened. If you weren't 1 hour trader, instead you have been a 15 minutes chart, you could have studied the 1 hour chart and going down to the 15-minute chart, and this is what you were about to see in the 15-minute chart. You were about to see something looking like an evening star formation. So that was a bearish signal. And going short with immediate target level, the previous low over here at 1960. Okay. Summary. A buy setup in uptrends requires price pullback to a support level identifying the higher time frame charts. Momentum reversal signals such as a hammer, candle appears, or your MACD and etc., your stochastic, etc., in either 16 or 15 minutes if you're depending on which time frame you're trading, and buy at the close of the candle if you have confirmed a reversal. Yes, I can share the presentation via email. Don't worry, guys. I will try to send it to all of you. In a downtrend, if you see something like a pullback away from a resistance level in a higher time frame, daily or 4 hour, or in an hour, 1 hour, if you are about to trade 15 minutes chart, then check your momentum and check whether your momentum indicator is presenting some kind of a reversal signal, or your candles are presenting a reversal, such as a shooting star. And then try to enter at the close of your 15-minute candles if you are trading a 15 minutes candle. So that was it, guys. So ignore that, sorry. Oops, sorry for that. So I will we are nearly to the end of it, so I would like to let me know about questions, because now is the time, to be honest. So yeah, now is the time for questions. So let me know if there is anything that I can help you with. And don't worry about the slideshow. I'm gonna send it to you, and actually I'm gonna send you more than one, because we had other slides as well that they had to do with multi-timeframe analysis, so they might help you. The more the merrier, right? So yeah, any questions before we call it a date? So ignore that. So come on, no, back. Ah, sorry for that. Stuck. And PC stuck. Perfect. Sorry, guys, it's stuck. Oh, what happened? Oh, you have questions. What do you do if the 4-hour time frame shows a bearish signal? So, and while the 1-hour time shows a bullish momentum. So, okay, that means that you have a rebound in the 1-hour chart, right? So a rebound. So let me check. Bearish signal in the 4-hour chart, which is your higher time frame, I assume, Daniel. Down, but bullish momentum in the 1 hour chart. So it seems that the asset is trying to correct a bit, maybe consolidate or correct a bit. So what you do is, since you are overall trend, so the longer time frame, the 4 hour chart in this case is bearish, but your 1 hour is bullish, it means that it's chasing for, it's oversold maybe, or it looks for a bit of a correction, consolidation. So you need to wait until the market, until your 1 hour chart starts pointing to the downside again. Because now it seems, if that's the case, without knowing what you're seeing, without knowing what exactly you're seeing, I assume that the asset, for having 1 hour bullish one, it might try to correct. So you need to wait for a breakdown to the downside, which will mean the continuation of the bearish signal that you have seen in the 4 hour chart. Do you understand me? If not, send me your chart, send me what you're seeing. Cool, Nicole. Of course. So I'm gonna send you more than one slide shows. What about the forex, especially how to trade? Is it better on 1 hour? No. Okay. It's not better or worse. Audi. What kind of time frame you are usually trading? Can you let me know? Where is Audi? Yeah, I'm using daily for analysis and then entering a 15 minutes. No, that's far away. No, Audi. No. Okay, it's good to monitor the daily chart just to see the overall trend, but don't take decisions. If you are entering a 15 minutes chart, don't take your decision based on your daily chart. No, that's too far away. What you should do is, since you like trading in a 15 minutes chart, you should go 2 steps upwards. So 4 hour chart, sorry, 1 hour chart, check your 1 hour chart, then your 30 minutes chart, and take your decision on the 15 minute chart. No more than that, okay? Sorry, there are a lot of questions. So it's not a matter of whether you are trading Forex, Euro dollar, or dollar CAD, or whatever. If you're a 15 minutes chart trader, you should monitor. You should use out your long-term one, your 1 hour chart, then check your 30 minutes and take your decision on 15 minutes and enter on the 15 minutes. Thank you very much, William. Hopefully I will get well soon. You are welcome, Macau. Audi, sorry. The webinar is actually something is wrong with the PC. I cannot it's stuck. I can still see your questions though. Don't know what's going on, but don't worry about it. We have reached to the end of our webinar. I'm gonna send you out. I'm gonna send you the slides anyway, so don't worry about it. Yeah, I know, guys, that your screen is black. For some reason my PC is stuck and I don't know how to fix it right now. Which trading session is most volatile? How do I? Okay. The most volatile trading session, it tends to be the US one. It's because we have US open, EU still open, okay, and the majority of the political news and fundamental news and economic releases are taking place in the US session. Okay, so that's the most volatile session. How do I interpret news from economical data? So that's it's a very, very different webinar. We have one, but what you should understand is that good economic data, tend to support the currency of that country. Like the NFP on Friday, it beat expectations. It showed that the earnings, so the salary of the people increasing, there are more jobs, the unemployment decline. So that's a positive thing for a country. That's why dollar boosted on Friday. So the good economic data are supporting the currency of the country. Bad economic data tend to add pressure on the currency of the country. Just very, very briefly, Zubairu, but we have a webinar called How to Trade the News. Okay, so feel free to watch it if you have some spare time. Okay, what do you do when you find conflicting pins in W on the lower time frames? So double bottom, you mean waiting for confirmation. So waiting for my price action, waiting for another session, so to confirm that. So conflicting pins in W, I guess you're referring to a formation of a double bottom or a W formation. So what I do, pretty much wait for confirmation from my side, price action to indicating that it will extend higher or it will revert again. So waiting, patience. And of course, the momentum to be in line with the price action. If I get in conflicting signals, I just wait. If you're not sure about something, Nicole, it's better to stay out of it. I'm using daily for analyzing. It's conflicting, meaning bearish one. Yeah, bearish one, bullish the next. Yes, so wait, that's consolidation. If you are referring to a particular time frame, so you're getting, let's assume in the 1 hour chart, you're getting one bullish candle, one bearish, one bullish, one bearish, one bullish, one bearish. Then wait for clarification, because what that means is that it's consolidating, it's moving sideways, so it's directionless, right? How do I choose time frame to trade? I'm afraid you need to try a bit your demo, Limacacho, in order to build. First of all, you need to identify what kind of trader you are. Are you patient? So you believe you can be a long-term trader because you are patient. Also, you might not have time to spend in the market in a daily basis, so you prefer being in a long-term trader because you don't have to check your charts every hour, let's say. It depends on you. If you have a second job and you're doing this as a hobby or as an extra income, then you might consider trading in a longer time frame. So that implies to daily, weekly, monthly. So if you are this kind of trader, then you should focus on those time frames. But if you're not this kind of trader and you have 2 hours a day, 3 hours a day to trade, then you might consider lower time frames. So in order to open and close your position within those 2 or 3 hours that you have available to spend in your for trading. So it's based on you pretty much, and your emotions as well. Sorry, Dean, my PC is stuck, but we reached to the end of the webinar anyway. That's why the screen is black. I'm gonna send to everyone the slides, so don't worry about it. Audi, thank you. Is it mean that one step below, just like 1 day to 1 hour, 1 hour to 15, two scales down? So if you're a 15 minutes trader, you will go 2 steps up. So 2 steps up from the 15 minutes, it means it means 30 minutes and 1 hour. So you will start from the 1 hour and going down to your 15 minutes. Now, if you are 1 hour trader, then yes, start from the daily, check the 4 hour, and then go eventually to the 1 hour in which you will take your trade. So, I reached to the end of the questions. I would like to thank you guys for attending. I'm gonna send you the questions ASAP, the slides ASAP. Thank you very much for attending. Hope you're having a great day ahead. I'll try to fix my PC. Haven't identified yet what. Oh, thank God. So it's back. So tomorrow we have trading the market opens with Stuart. So this is something that might interest Zibairu. And you asked me before about the volatility of which trading session is most volatile, and the economic calendar as well. So yeah, you might be interested on Stuart's webinar for trading the market opens, because as I said, the US Open is very volatile one. So have a look on Stuart's webinar tomorrow. So that's it from me, guys. Thank you very much for attending. Hope you're having a great day ahead, and I'll see you again probably on Thursday or Friday with a Facebook and YouTube live. Thank you very much. I won't forget the PDF, Zaiberu. Thank you very much. Thank you. Bye-bye.